Welcome back to the channel, my friends. And if this is your first time here, buckle up, because what you're about to watch is not just another crypto update. This is the Crypto Deep Dive of 2025, a full-blown, two-part exploration into the digital financial revolution shaping our world. Now pause for a second and ask yourself, remember when crypto was just a niche thing? A space for tech geeks, libertarians, and a handful of retail dreamers trying to catch the next moonshot? Well, fast forward to today, crypto is no longer niche. It's mainstream, it's political, it's institutional, and it's everywhere. In 2025, we're not just talking about the price of Bitcoin anymore. We're talking about the global financial infrastructure being rebuilt in real time. Governments, banks, hedge funds, payment giants, they're all playing the game now. This is no longer a sideshow. This is the show. Today, Wall Street isn't mocking crypto anymore. They're pouring billions into it. Entire sovereign funds have Bitcoin holdings. Ethereum is the backbone of tokenized assets. BlackRock and Fidelity are launching tokenized funds. Stable coins are being used in trade settlements by Fortune 500s. And even central banks are working on blockchain rails to stay relevant. What does that tell you? It tells you this. We are entering a new era where crypto is not just a speculative asset class, but a critical layer of the global financial operating system. So what exactly is this video series going to deliver? In this two-part, in-depth video, we're going to cover everything you need to know about the crypto landscape in 2025. And we're not holding back. In part one, we're going deep into the current state of the crypto market, what's growing, what's fading, and what's coming next. The rise of institutional adoption and how it's reshaping Bitcoin, Ethereum, and the altcoin market. Innovations in scalability like layer 2s and modular chains. How real-world assets, RWAs, are bridging traditional finance with DeFi. NFTs, stablecoins, the next generation DeFi protocols, and even what's happening with Bitcoin ordinals. We'll also explore the key investment narratives. What tokens and technologies are leading the charge? Where's the smart money flowing? What new models are thriving? And which are dying off quietly? And then, in part two, we're switching gears, because no matter how innovative crypto gets, regulation is the real battlefield now. You'll get a comprehensive global overview of crypto regulations in the United States, where politics, the SEC, and innovation are colliding. The European Union, with a MiCA framework, is making waves. Asia, with Singapore, Hong Kong, and even China's digital yuan dominance. The Middle East and Africa, rising Web3 powerhouses with unique strategies. Latin America, where crypto is no longer an investment, but a survival tool. We'll also dive into Web3 governance, CBDCs, on-chain identity, KYC battles, and the rising tension between decentralization and state control. But here's the real kicker. This video isn't just about the headlines or the hype. It's about understanding where we're really headed as investors, builders, policymakers, and citizens of a rapidly digitizing economy. Because in a world where central banks are creating programmable money, governments want surveillance-level compliance from DeFi protocols. Smart contracts are replacing traditional agreements, and trillion-dollar financial empires are being built with open-source code. You need more than hot takes. You need clarity, insight, and strategy. That's what we're serving. Crypto in 2025 is a story of transformation, of ambition colliding with regulation, of freedom versus control, of decentralization, struggling to survive in a centralized world. But it's also a story of opportunity. One of the greatest financial transitions in modern history is unfolding, and most people are still sleeping on it. But you're not most people. You're here because you want to understand, not just speculate. So whether you're a seasoned investor, a DeFi degenerate, a curious newcomer, or someone who just wants to know if crypto still has a place in the world, I promise this series will be the most valuable 80 minutes you spend on crypto this year. And remember, this isn't financial advice, but it is information that can help you make smarter decisions. We'll be looking at data, regulations, trends, and behavioral shifts, all with a healthy dose of skepticism and clarity. All right, let's dive into part one, trends, innovations, and market movements. We'll start with the current state of the crypto market in 2025, break down how Bitcoin's identity has shifted, and explore how Ethereum and the broader ecosystem are solving for scale and usability. Get comfortable, grab a drink, and let's pull back the curtain on the future of finance. Welcome back, friends. Let's get into it. This is where things get real. Because if you're going to understand where crypto's headed, you need to see exactly where we are right now. And spoiler alert, it's not the same old Bitcoin versus Ethereum debate anymore. We're talking about a $1 trillion ecosystem that has grown out of its rebellious teenage phase and is now knocking on the front doors of Wall Street, Washington, and pretty much every major central bank around the globe. So let's kick things off with a bird's eye view. Market capitalization and dominance, a new landscape. As of mid-2025, the total crypto market cap is hovering around $3.7 trillion. Yeah, you heard that right. We're back near all-time highs, and it's not just because of hype or some wild meme token season. This growth is structural. Bitcoin is still king, but it's a very different kind of king now. BTC dominance sits at about 43%, which is slightly lower than in previous cycles, and here's why that matters. Ethereum, and more importantly, everything built on top of it, is now a serious economic engine. From layer 2 solutions to tokenized assets and real-world integrations, ETH dominance has surged to around 22%, and it's increasingly becoming the financial plumbing of Web3. But wait, here's the twist. The rest of the pie? That's where things get spicy. We're seeing entire sectors of altcoins, especially those focused on real-world assets, RWAs, depend decentralized physical infrastructure networks, and privacy-enhancing tech, carving out double-digit shares of market cap. Projects like Chainlink, Polygon, Celestia, and even newer L1s like Say or Sway are making real waves. Stablecoins alone now represent over $350 billion in circulation, with USDC and a tokenized version of the euro gaining serious traction in international trade. It's not just about price anymore. It's about utility. And utility is what's driving adoption. Key players in 2025. Who runs the game now? Let's be honest. 2025 has exposed just how much the power dynamics in crypto have shifted. Yes, the OGs like Satoshi, Vitalik, and CZ still echo through the halls of crypto history. But the new big dogs? They wear suits, sit on regulatory panels, and have Bloomberg on speed dial. Let's start with the institutional wave. You've got BlackRock, Fidelity, and Franklin Templeton offering tokenized investment products directly on blockchain. Not through ETFs or paper-based funds, but through smart contracts on-chain. We're seeing billions flow through tokenized treasuries, real estate, and even equity derivatives. Then there's the rise of crypto-native institutions. Think Coinbase Institutional, Anchorage Digital, Fireblocks, Circle, and Eigenlayer. Companies that aren't just surviving the regulatory storm, they're thriving in it. And don't sleep on the sovereign players. Dubai, Singapore, Nigeria, and even Hong Kong are fast becoming the regulatory safe havens for crypto innovation. Their state-backed funds are pouring into Web3 startups. Their central banks are testing blockchain rails for CBDC delivery. And their governments? Actively recruiting crypto talent with tax breaks and innovation zones. Even traditional tech giants are in the mix. Google Cloud, Amazon Web Services, and Microsoft Azure now offer blockchain-as-a-service suites. They've integrated nodes. They're signing smart contract deployment deals. And yes, they're tracking your data, too. But we'll get to that part in part 2. Here's the truth. In 2025, if you don't know who the real power players are, you're playing blindfolded. The evolution of public perception, from fringe to foundation. Let's take a quick trip down memory lane. Remember the days when your friends would laugh at you for buying Bitcoin? Or when your uncle called it a Ponzi scheme? Or when a mainstream media couldn't tell the difference between blockchain and Fortnite skins? Yeah, those days are gone. Public perception of crypto in 2025 is drastically different. And here's why. First, education has exploded. From YouTube channels like this one, to university programs, to on-chain credentialing courses, people are learning. They're not just aping in. They're researching. They're asking about tokenomics, governance models, regulatory compliance, and real-world utility. Second, real-world exposure. A growing number of people now use crypto, not just trade it. Whether it's sending stable coins to family abroad, earning yield in a DeFi pool, or logging into a Web3 social media account using their wallet. Blockchain tech is bleeding into daily life. We've even seen entire labor markets evolve inside crypto economies. Think DAOs that pay monthly salaries. Think creators earning in stablecoins. Think on-chain resumes and reputation scores. Third, the media's changed its tune. CNBC now has a crypto desk. Bloomberg issues crypto indexes. Financial Times runs Ethereum analysis pieces. Politicians campaign on crypto-friendly platforms. Presidential candidates are tweeting Bitcoin memes. And let's not forget, the SEC is practically a household name in crypto circles. Crypto is no longer this thing for tech weirdos and libertarians. It's part of the financial, political, and social conversation. It's a legitimate and, at times, controversial pillar of the modern economy. So what does all of this mean? It means we've entered a new phase, one where crypto isn't asking for permission anymore. It's building, it's adapting, it's winning court cases, it's attracting capital, and it's setting up long-term infrastructure to stay for good. Sure, we've still got scams, rug pulls, and shady pumpers. That part of the jungle hasn't gone away. But the serious players? They're establishing the base layer of the next financial internet. From tokenized securities to identity protocols. From smart contract-based insurance to decentralized energy markets. From crypto remittances in Latin America to CBDC experiments in Asia. The crypto market in 2025 is not about if this tech will be adopted. It's about how much it will reshape the world we live in. So here's where we stand. Crypto market cap is growing and more stable than ever. Bitcoin is digital gold, but Ethereum is the economic backbone. Institutions and governments are no longer spectators. They're participants. Public perception has matured from what is crypto to how does this affect my future? We are no longer early, but we're still early enough that the winners and losers haven't been fully decided. So stay sharp, stay skeptical, and stay informed, because understanding where the market is right now is the key to predicting where it's headed next. In this chapter, it's where things get political, real political, because as much as we love our DeFi apps and NFT flexes, none of it matters unless the laws say we can use them. Crypto doesn't live in a vacuum. It operates in the real world, with regulators, tax authorities, election cycles, and international power games. This chapter is about regulation, geopolitics, and how they will make or break the future of Web3. Let's dive in. United States regulatory landscape. If you've been in crypto for more than 5 minutes, you've probably heard of the epic turf war between the SEC and CFTC. It's a classic who's the boss scenario. The SEC wants to regulate most tokens as securities, which means lengthy disclosures, restrictions, and court drama. The CFTC, on the other hand, sees some cryptos like Bitcoin and maybe even Ethereum as commodities, not securities. That's a much lighter regulatory lift. This ambiguity has created chaos for founders, investors, and even regular users. One day you're fine. The next day, your favorite app is delisted because Gary Gensler raised an eyebrow. Then there's the battle over stablecoins. The U.S. government wants them regulated like banks. But crypto companies argue that they're just digital cash, no different than Venmo balances, only better. On Capitol Hill, the mood is mixed. Some politicians are riding the pro-crypto wave. Others are calling for a total crackdown. After the 2024 election, it's clear crypto is no longer a fringe issue. It's on the political main stage. European Union and MiCA framework. Meanwhile, across the Atlantic, the European Union has taken a more mature, methodical route, and it's centered around MiCA, the Markets in Crypto Assets Regulation. MiCA is the EU's all-in-one crypto compliance playbook. It defines what a crypto asset is. It outlines how companies should register. It introduces rules for stablecoin issuers, exchanges, and wallets. Unlike the US, where companies are guessing what the rules are, MiCA brings clarity. It's not perfect, but it's predictable. One key feature? Passporting rights. A crypto business licensed in one EU country can operate across all 27 member states. This makes Europe a fertile ground for Web3 startups looking for regulatory shelter. And it's working. Cities like Lisbon, Berlin, and Paris are becoming crypto hubs. Meanwhile, the US continues to lose talent to Europe's more stable, and open framework. Asia Pacific. Innovation and caution. Asia is a mixed bag of innovation and control, sometimes in the same country. Singapore has become a regulatory gold standard. Its monetary authority is clear, collaborative, and forward-thinking. The city-state encourages innovation, but within defined boundaries. It's no surprise major players like Binance and Circle are flocking there. Hong Kong, once a crypto ghost town due to China's clampdown, is making a comeback. In 2023, it launched new licensing regimes and invited crypto firms back, signaling a dramatic shift in tone. Mainland China, though, still officially anti-crypto. Mining and trading are banned. But here's the twist. China is also one of the biggest pioneers of CBDCs, or central bank digital currencies. Its digital yuan is years ahead of the rest of the world. It's a paradox. No to decentralized crypto, but yes to centralized digital money. That tells you where their priorities lie: control over code. Middle East and Africa, a rising frontier. Now let's talk about the Middle East and Africa, two regions that are rapidly emerging as crypto frontiers. In the UAE, especially Abu Dhabi and Dubai, crypto is booming. Clear rules, tax incentives, and supportive regulators have turned these cities into global Web3 hubs. They're attracting exchanges, developers, and even crypto hedge funds. In Africa, the story is driven by necessity. Countries like Nigeria and South Africa are embracing crypto as a lifeline for remittances, inflation protection, and digital inclusion. Nigeria even launched its own CBDC, the e-Naira, although adoption has been sluggish. The real action is happening in peer-to-peer crypto. People are using USDT and Bitcoin to send money, pay freelancers, and store value. It's not hype, it's survival. LATAM and crypto for the people. Let's head to Latin America, where crypto is being used, not just speculated on. In Argentina and Venezuela, where inflation has ravaged national currencies, stablecoins have become a digital safe haven. People are using crypto for day-to-day transactions, groceries, rent, salaries. Brazil has taken a more institutional approach, integrating crypto into its central bank systems and exploring tokenized government bonds. And then there's El Salvador, the first country to make Bitcoin legal tender. Is it working? Depends on who you ask. The country has seen tourism boosts, new infrastructure, and Bitcoin bonds. But critics say adoption is limited and mostly driven by government mandate. Regardless, El Salvador proved one thing: a national experiment in Bitcoin is possible. Web3 regulation, decentralization versus compliance. Now here's the philosophical heart of the whole issue. How do you regulate something that's decentralized by design? DAOs, or decentralized autonomous organizations, don't have CEOs or addresses. So who's liable when something goes wrong? How do you do KYC and AML on permissionless protocols? Do we force developers to become gatekeepers? Or do we innovate new forms of identity that balance privacy with compliance? This is the Web3 paradox: how to stay decentralized while staying legal. Some protocols are turning to zero-knowledge proofs, on-chain reputation scores, and smart contract audits to bridge the gap. But the battle is just beginning. The rise of CBDCs. Centralization strikes back. CBDCs, or central bank digital currencies, are the government's answer to crypto. Countries like China, Nigeria, and Sweden are leading the charge. Their goals? Faster payments, financial inclusion, better monetary control. But critics are sounding alarms. CBDCs can become surveillance tools, tracking every transaction. They can be used to freeze wallets, expire funds, or program spending. It's programmable money, for better or worse. So while crypto wants decentralization and financial freedom, CBDCs offer centralization and state control. Two competing visions of the future. The future of Web3 in a regulated world. So where is all this going? In a regulated world, Web3 will evolve in three core areas: identity, governance, and infrastructure. Expect on-chain IDs that can verify humans without exposing private data. Expect hybrid models, where DAOs interface with regulators through legal wrappers. Expect more bridges between AI and blockchain, with predictive governance, automated compliance, and real-time audits. Oh, and quantum computing? That's going to force us to rethink cryptographic security from the ground up. The Web3 of 2026 won't look like the Web3 of 2021. It'll be smarter, safer, and maybe, just maybe, more sovereign. All right, let's bring it home. If you're an investor, builder, or just Web3 curious, here's what you need to know. Regulation is coming. Don't fight it, understand it. Decentralization isn't dead, it's evolving. The biggest gains won't go to early adopters. They'll go to early understanders, people who grasp where the puck is going, not where it's been. Crypto's not going away, but the rules of the game are changing. So build smart, invest wisely, and stay informed. Because in this new era, where crypto meets geopolitics, the winners aren't just writing code. They're reading the fine print. If this deep dive into crypto, regulation, and the future of Web3 open your eyes, you're in the right place. On this channel, we don't just chase trends. We break them down, connect the dots, and show you where the world is headed. From blockchain and digital assets to geopolitics and global finance, we decode the new economy so you can stay ahead of it. So if you're serious about building, investing, or simply understanding the next wave, hit subscribe, turn on notifications, and join the movement. Because here, we don't just watch the future, we shape it.